How's everybody doing? Get this all started here. Get myself situated. Get myself on YouTube so I can see any questions. They're going down. Looks brighter on my screen than it does on my actual screen. Alright, so don't really have a very big agenda today, but I guess I'll get it started. It's brighter on my screen. It does. Sorry about that. Had it playing on my phone, but anyway, get it sort of kicked off here. Welcome back to another live stream. So I tried making this one a little bit later because I think the last time I did one was about 5 p.m. East Coast time in the United States. So this one, already questions. I love it. Tried making this one a little bit later so some of the folks that are viewing in Asia have a chance. Europe, we're probably asleep, so I apologize for that. Probably closer to midnight for some of you guys, maybe closer to 1 o'clock. So sorry it's a little bit late, but hopefully this is good for some of the folks on West Coast time because they might be just getting off of work. It's like 4:30 West Coast time. So still trying to get people situated. Oh, you can add ads whenever you want. Sorry, I'm still getting used to this stuff. So I was just going to start rambling until we got some people on here, but we already got a question. So for Cardone Capital, do you ever figure out if you can reinvest? I haven't checked that yet. Apologies. I said I would check it. Actually, I'll check it on the fly right now. But I did get my first payment. I think I mentioned that in another video. It's for like 56 bucks or so. You guys can't see this, can you? No, you can just see me. And if you do, then, well, I'm screwed. Because then you can see what my username is and stuff. But looks like the only thing I'm transmitting is my face. So I'm looking in here now, going into my investments on Cardone Capital. I can see my distributions. I can see my capital balance, transactions maybe. It's talking about offers that I'm trying to get involved in. Tax, closing documents. Ooh, there's a Q2 report. That'd be cool. I'm gonna look at this now. Anyway, so I got 5 or 6 of y'all in here. Coming in now. Average viewing time is about a minute. This is kind of cool. So anyway, I don't want to do that. You guys can't see any of that. So hey, what's up, Berg's Corner? How you doing? Thanks for stopping by. So for my investment strategy, I think a lot of people are curious or have been asking, at least in the past couple videos, or about a month or so ago, what my plan is if the market ever really goes down. And the hope is that I continue to invest. Hopefully that if the market continues to go down, I continue to invest, however much money, hopefully about 50% of my income into the market every month. So that way I can continue to buy stocks at cheaper prices. Could you use quarterly dividend payments to buy Gucci flip-flops? All right, man. That's a good way to live your life if that's what you want to do. My hope is eventually to do that. I could do that if I want, but so yeah, specifically talking about where I'm at. So luckily for me, I'm able to really save a lot more money now that I'm living in another country. But the hope is to continue to invest. I just bought another 110 shares of Bryn Mawr Bank Trust. I think it was for about $4,000. Bought that because it's a small regional bank and wanted to see how that continues to grow. It's from around my area in southeastern Pennsylvania. So that being said, I continue to see them popping up locations throughout, buying local banks up, so they continue to grow and grow and grow. So I bought 110 shares of that to get me around about a number for about 200 shares. So that means I own like 0.0001% or 0.001%, something like that, of the company, which is kind of cool because I only have 20 million shares. I own 200 shares, so do that math for you. And I also bought today some IVV, which is an iShares S&P 500 fund. So that was good for about $500 or so, and that was using YouTube money that I got. So I just got $177 from YouTube this morning, direct deposited into my bank, and so I immediately put that back into the YouTube Moolah portfolio, and had about $200 or so sitting there. So that $200 or so plus the $177 that I got was able to invest in the S&P 500. But so yeah, I'm curious what your guys' thoughts are. There are some folks that were rather upset that woo! Actually, funny story. So that was the Ric Flair woo for you. Funny story. Hopefully I don't get kicked out of this apartment. My friend just bought, I'm going to see if I can pull it up. He just bought a Ric Flair shirt. So I don't know if you guys follow Spice Adams at all on Instagram and YouTube, but my buddy sent me a picture of the shirt that he just bought. I wasn't sure if it's through Snapchat. I hope it's not. I think it might be. Oh, it is. But anyway, I'm going to pull it up, this Ric Flair shirt. So Spice Adams got this Ric Flair shirt, and me and my buddy lost it. We think it is one of the coolest shirts of all time, and I really want to buy one. And you guys can already tell I'm a bigger dude, so they make them in pretty big sizes. Oh, man, I'm not seeing it. There it is. So let's see if we can get a good glimpse of it up here. Let me switch to my other software. You can't see it too well. Maybe it'll look a little bit better that way. You can see Ric Flair on there. Like, is it Waldo? Like, I don't know who the hell else is on there. Oh, it's just Ric Flair in like a jacket and then a robe. The red one is in a robe. The blue one is a jacket. It's pretty sweet. But I absolutely love that shirt. I really want one. So hopefully you guys don't get me kicked out of this apartment. But also kind of funny, when I have a drink or two, when I'm letting loose, I generally do the Ric Flair route. Did I get a chance to check out YYY? High dividend yield. Please let me know what you think about monthly dividend like YYY. I did not get a chance. Let me look at it right now on the fly. YYY ETF. Curious what I look like. iShares or yield shares, high income ETF. So let's see, $17 per share does not provide a yield on Google. So let me go on to ETF.com and see what this bad boy shows up as. YYY ETF report. So it's got competing funds. Let me get an overview here. So expense ratio. Wow, are you serious? Expense ratio is 2.28%. So that's pretty high. So 2.28%, dividend distribution yield is 8.9%. So let's talk about this for a second. Not trying to deter you, but immediately could do this calculation because now I'm curious. So let's just take the 8.9% that you get in the dividend yield. You subtract out your expense ratio. So really automatically you're down to 6.6% in terms of an actual dividend yield because you're going to end up having to pay that expense ratio, if that makes sense. So that 2.28%, I mean, they got to be doing something pretty crazy for me to be buying that. I mean, I don't know how actively managed this is, but looks rather scary. So let me see total max. So for me, when is this? This is back in 2014, 2013. So 2013, it was worth about $25. 2016, it dipped down to about $16. Now it's hanging out at around $19, $20 in the 2017 time frame, and it's been hanging around $17 to $18. So just looking at this, you're getting, let's say 8% in dividend yields. Let's say 9%. Let's be nice. 9% dividend yields, but the price of the stock isn't really going anywhere, and it's actually going down, which is pretty scary in my opinion. And then also, so I'm not investing per se for the value of the stock to go up, but for me, seeing that just means that there's either some sort of fear so that people actually don't want to have the stock and they continue to sell it, which is causing the price to go down, which might mean that people don't have confidence that they'll continue to be able to supply the dividend. Anyway, that's just my initial thoughts. But expense ratio of 2%, that's pretty crazy. I don't necessarily know if I'd be all about that. What are my thoughts on MLPs? Cheniere, Seadrill, if I remember correct. Yeah, Aaron. I own some MLPs. So now I'm starting to understand that they do have a different tax structure. So there's nothing wrong with owning them. I just think that with how much I do own, it probably would be more beneficial for me to own those within a Roth IRA. So I'm not necessarily sure how that works. At the moment, I do have a decent amount of real estate investment trusts and also a partnership within my Roth IRA. But I think what I need to do is be more mindful that I am getting charged at a higher tax rate because I am in a partnership with Cheniere and Seadrill. Seadrill Partners, obviously, I made a bad investment decision on that. Obviously, I think I'm down around 95% in total on that. So for me at this point, it's like, should I even worry about selling it? Probably not. I think it's like $150 worth of stock. My thought is maybe it turns around and eventually gets some sort of money back and ends up being something that consistently pays me a dividend. But worst case scenario, it goes belly up. Who knows? I'm not too concerned about it. The amount of the percentage that it is in my portfolio is less than 1, so not too upset about it. But I guess I'm kind of still trying to understand what specifically you're asking about with MLPs. I have no problem with them. It's just I think people need to be wary that they do have a little bit different of a tax structure where they pass on some of the taxes to the shareholder. So just be conscious of that. Seems to be fairly undervalued. Are you talking about Cheniere or are you talking about um, Seadrill Partners? Because obviously, if you're talking about natural gas, you're probably talking about Cheniere. Seadrill Partners is a driller. Sorry, I'm about to burp. What are my thoughts on energy space? So yeah, I know that Warren in the past has gone back and forth with Suncor, and I followed him into an investment in Suncor. I want to say in mid 2014, and then eventually sold that for about a break-even profit. I think in 2016. So yeah, not generally too sure what to say about Suncor in particular. Energy space. I talked a little bit about this in my last live stream. So I think what you need to recognize is, in my opinion, is we're in this space of transition, going from say oil to gas to renewables. And so I think what some people talk about is gas being a transition fuel, a transition fuel, not transmission fuel, transition fuel, where we're essentially utilizing oil at the moment to power cars, electricity, things along those lines. But we're going to utilize natural gas, hopefully as a bridge, to be able to get ourselves to renewable energy sources like solar, wind, what have you. I think the reason why people consider it a transition fuel is because it's less carbon intensive than oil and gas and coals as well. But it's also cheaper at the moment. But that's not to say that oil and natural gas is going to go away as an energy stock or energy fuel, I guess is the right way to say it. So I don't necessarily know what to believe, but I think what you will notice is companies now like Shell, BP, Exxon, they're all trying to plan out their future within the renewable energy space. And I can't really speak on behalf of any of them because I don't necessarily know what their intense strategy is. But I would say, looking specifically at the energy space, I know that Shell and Exxon are doing a really good job, as well as BP, trying to work in the alternative energy space, whether it's biofuels, like BP's been doing stuff with sugarcane, Exxon's been doing stuff with algae, renewable energy, and oils, and what have you. But I think that there's still a lot of space in the natural gas market that people don't give credit for. There's things called hydrates and what have you that are extremely full of methane. And if we're able to somehow learn and unlock a technology that will be able to harvest that, then I think natural gas is here for a very long time. But at the same time, solar and wind is also very good and becoming more energy efficient as well. So I don't necessarily know an answer to your question about specifically oil and gas stocks, but I think in the long term, depending on what your age is, if you're, say, younger like myself, below 30, looking to aim for something in the next 20 to 30 years, my focus would be towards something on that's going to be a company that's focused on becoming an energy company, not an oil and gas company, something that is going to try to leverage both sides, whether it's fossil fuels and renewables, fossil fuels like oil, coal, natural gas, leading towards renewables as well. So, and I think that a lot of the oil majors are doing really well with that at the moment. So, yeah. Thoughts on QLD, NASDAQ covered ETF, pays a greater than 10% dividend. So I'm weary about anything that pays a greater than really 5 or 6% dividend. I'd say once things get above 4.5 to 5%, I really start to question it. And I really have to look into the cash flow that company is providing in order to supply that sort of dividend. So immediately, outdoor video, looking specifically at your question, what are my thoughts on QYLD? Seems pretty suspect to me. So, did I miss anybody else's questions? McKenna, QLD. Anybody other has questions as well? I'm not trying to lead the conversation. I think that I have the best conversations, or at least ramble on the best, when you guys provide ideas for growth. My voice keeps cracking like a child. Hold on, let me. Yes, I'm drinking out of a carton like I'm a child. Smaller oil and gas is pumping out oil at a record pace, not slowing down, which causes biz losses in earnings. Investing with AA, Ron, I believe you are correct, but I think at the moment, my perception, not say reiterating somebody else's verbiage or agenda, is I think that large oil and gas companies are using this as an opportunity to, one, either outlast, well, I can get into a really deep conversation about this, outlast their competition and be able to maximize their own profits while watching others struggle, which I think has been going on since the late 2014 timeframe. But this gets into a larger business thing as a whole, and I don't necessarily know if I want to go down that route, but it's a lot of what I've been reading and listening to that Simon Sinek talks about, which is not necessarily leading in terms of profits, but in terms of purpose. And I think that's an interesting concept. I don't necessarily know if I want to go down that path without more of a correspondence. Anyway. Green Ghost, what's going on, man? At what price do I want to buy back into Realty Income Corporation? Man, that's a good question. I see it go down sporadically into the 60s again, and man, it's crazy just watching this thing. I remember starting to invest in Realty Income Corp when the dividend was 18 or 18 cents, 18 and a half cents a month. Now it's up to 22 cents, so they've increased it by about 15 to 20%, and it doesn't look like it's stopping whatsoever. Love that company so much. One of the things that I have been noticing, though, is they don't have a lot of international exposure, and not that I'm specifically looking for international, but I think that it would also be nice to have a little bit more. So in more recent times, I've led towards WP Carey as a company that I invest in for long-term real estate. But that being said, they pay on a quarterly basis, not on a monthly basis. So, but what price would I buy back into? I bought, let me double check, but so I sold in the 70s, and I also got caught on a covered call, I believe at $65 or something along those lines, but had another 100 shares that I sold in the 70s or something like that, and then I bought back Realty Income Corp, I believe like 19 or so shares at $63. So there was a dip. I want to say, let me double check, but there was a dip. Does this say when I bought my shares or no? Doesn't say. Let me see. No, it doesn't say, but I bought back last time it was in the $63 range, which I want to say is close to a year ago at this point. And I would say I'd be comfortable with that, but I would probably aim for a 5% yield on that company. So with the current yield, about 22 cents times 12, 2.7, Uh, oof, probably around $60 would be my preference. Um, Getting it at a 5% yield would bring it down to like $55 at the moment. I don't think we'd get to that point. But also looking at it in that perspective, I don't remember what their current funds from operations are. And so I'd hopefully want to buy it at a close to 15 times funds from operations. So if they're making about $3 or so, no, they'd probably be making. I think they're making closer to 350 from funds from operations, adjusted funds from operations. So it's around the same point, around $52 to $55 is where I would preferentially wanting to buy it at. But knowing that it's a higher quality company, I'd probably aim to buy it anything around 60 to 65. I'd probably start to buy some. I wouldn't back up the truck if you know what I mean by that. I don't think I would buy like hundreds of shares. Not that I'm even capable of, but if it went down to like 50 some bucks again, I'd probably buy like 300 shares, which ends up being about, let's just say 55 bucks times 300, like $16,000 worth. And that $16,000 worth would give me about 60 bucks a month, almost 70 bucks a month. So, that would almost be $1,000 a year just in dividend income just from that. So, anyway. Hey, Joel Boston, what's going on, man? Many investing inspirations. Thank you, sir. Dante, how you doing, brother? Haven't seen you in a little bit. Glad you could stop by. Hope to see you. Hope to see some of your comments when you watch the whole stream. Hey, man, Joel Boston, thank you. It means a lot. Watch your portfolio grow, and I always told myself one day I'll get to that level. Hey, man, it's not. I'm glad that I'm inspiring you, but hopefully, what I'm doing is letting you watch where I'm at and watching me grow mentally as a person, because I think the portfolio is far from being finished. My goal, my midterm goal, like I mentioned, in 6-7 years, is get about $50,000 in dividends a year, so about $4,000 to $5,000 in dividends a month. So I'm only about not even $1,000 a month yet. I think I might be close to. In fact, while I'm on here, I might as well just start fixing and adding some of my spreadsheets, because I just got some dividends reinvested recently, and I just bought some stuff this morning, so might be close to $850 a month at this point. But where am I at? 16th. Is that the last time I updated it? It's pretty sad. But anyway, that being said, portfolio is far from over with, so hopefully it's an inspiration not only for where you're at today, but also to change your mind and your mindset to be bigger. Not saying that I'm the be-all, end-all, because obviously if I was, I wouldn't be making YouTube videos. I'd probably be, off doing conferences or something like that. But really just trying to document progress for myself. And I think the more I talk about it, the more I learn. The more that I grow internally as an individual. So, yeah. Didn't they just go overseas in London? I don't know about that, Joel Boston. I will have to. Hey, financial investor, what's going on? Let me check. Realty Income Corp. London. Realty Income Corp. That's another thing I haven't done. I've kind of just let this one go on standby because it's out of my price range at the moment, or the price at which I'd buy it. It's down to 3.75% yield. Man, that's not good. That's too high. Or too high of a price. Too low the yield for what you're buying. Portfolio. Asset management. Geographical diversification. You're right. Okay, so they do have a property or so in the UK, 4 properties in the Puerto Rico. They have 12 properties in the UK. That's right. I remember seeing a deal about this. It's less than 1% of their revenue at the moment. So I think WP Carey, I want to say, is anywhere between a quarter to a third of their income, rental income, coming from Europe or even elsewhere. But glad to see that Realty Income Corp is making that move. I thought you're striking a nerve with me now. I remember here, or not striking a nerve. That's not the right term. You're jogging my memory, if that's the right word. Anyway, I do remember seeing that. That was like a year ago that came out. Anyway, financial investor, what's going on? Investing with AA Ron, reaching out to financial investor, good people. Thinking about same as me, waiting for around $55. Yeah, man. I think 55 for Realty Income Corp is the spot. That's the thing. I think it's going to be pretty difficult unless the market crashes, and then I'm going to be buying pretty heavy. Anyway, Lord Slade, what's going on? Following me for a long time. Now that I'm living overseas, I'm able to invest more income. I think I talked about this a little bit on Sunday or Saturday. I don't remember when my last live stream was, but luckily for me, I don't have a car anymore. Well, that's a lie. I don't own my personal car, so I don't have to pay for insurance. And I don't drive nearly as much as I did before. And also the apartment, which you guys can see behind me, luckily, since I'm living overseas for work, is paid for by my employer. So luckily for me, the only thing I really have to pay for is food. But food in Trinidad is a little bit more expensive than I was expecting. One, at the grocery stores, and obviously to eat out as well. But I have been getting a little bit better about buying groceries, which isn't that much more expensive. But I do have an American palate, so that means I like my normal American things. Excuse me. Which are generally imported, so they're generally a little bit more expensive. But yes, small things, yes. Now I have a second cell phone, so that's like $50 a month extra. So give or take it ends up. I don't say it's a wash per se, but I will be able to save more money than I would have normally because I don't have to pay for a mortgage, which it's partially, or not a mortgage, but rent, partially offset by some of the higher food costs. So, I do a wonderful job presenting material. Thanks, brother. That means a lot. I don't think of myself as a very good public speaker, so I say a lot, or so I'm trying to work on that, and I think what ends up happening to me is I think I try to speak too quickly, and sometimes I think I need to slow it down a little bit so that I don't have to have filler words like So I'm adding a few more dividends in my portfolio while maintaining my index plan starting 2 years ago. I agree with the index plan. Me personally, I like to see the dividends come in, and as I grow the portfolio and I get closer to my goal, my midterm goal, I might transition into more of an index plan because I think the index plan is a safer route long term, and I believe that it's also going to be more consistent long term. But in the midterm, in the short term, when I'm trying to grow my dividends and get to that point where I'm less dependent on a W-2 income, I'm prone to wanting to invest into individual securities. And also, I think it's a hobby of mine. So I don't think I'll ever wholly go 100% into ETFs because wholly 100%. I mean, I will go into ETFs. That's what I'm saying. But I don't think I'll ever wholly 100% go into ETFs because I like purchasing individual securities and I like the passion and reading the reports, and I feel like I wouldn't get as much return mentally for myself if I were to be reading a report and I own, let's say, it's like 0.5% of my portfolio. And I have some companies that are, close to 5-10% of my portfolio. So reading their monthly reports or their quarterly reports means a lot to me and gives me validation when I read them and I agree with what's going on in terms of, are they paying down the debt like I thought they would? Are they? And so it's helping. I think that it might not necessarily be the best thing investment wise for me, but in terms of trying to understand how businesses work and how I would want to operate my own business, it helps me to invest in individual securities rather than just the market as a whole, because then it becomes less of an economic cycle and it becomes more of a trying to understand how the company works internally. I know that there is an economic cycle behind the scenes, and so trying to get validation when, say, there's a recession, even though a company might be maintaining earnings like some of the companies did in 2008, they continued to grow earnings and profits even when the rest of the market was going down and the stock price went down with it. Not necessarily saying that that's why I would be investing in a company is just to see the stock price go up. But anyway, going on a tangent and I'm losing myself there, but hopefully that kind of makes sense. But I agree with you. Going towards an index plan in the future would definitely be something I would be interested in. Dude, I forgot. Yeah, you're moving to Asia. That's awesome. So are you, Joel Boston, go back and forth a little bit. Are you, you're going to Korea, I think you said, and you are going to live there forever, or are you just going there for work? I forget exactly what you mentioned, but that's awesome, man. I completely forgot. Anyway, I'll check back on you in a minute. Buy tomorrow, Abby or T? T is high, Abby my quick pick of the two. What's Abby at? I know it dropped back into the 60s. 67? Yeah, it's good. I think if you want a long, so I guess it depends what I'm catching in late. I know you guys already talked about this, but in my opinion, if you're looking for, and I'm not a financial advisor, but if you're looking for a stock that will grow in terms of capital appreciation, Abby's probably it. AT&T might grow, but it's a little bit slower. Anyway, hope they get back to 80. I own about 64 shares. Abby. I prefer it below 30 as well for AT&T. I'm an engineer. Ron, I don't know if I'll necessarily say what specifically kind of engineer because it might. Anyway, but yeah, I'm an engineer. People putting on a show. I'm speaking on specifically what Investor's Guide put on there. Shouldn't long term. Well, kind of funny. My one friend. So my brother has a job. He just met a guy who used to work at a bank. I forget what bank it was. Maybe it was Charles Schwab. But my brother got a job working not at Charles Schwab, but another company. And this guy showed up and talked about investing. And he's like, my brother's into investing. So I took a picture of my big pie chart with all my investments and all my stocks, where it says like I own 1% of this company, 2% of that company. And my brother also sent it to one of his friends, and he was just like, why does your brother invest like he's an 85-year-old man? And I thought that was pretty funny. One, because I don't invest completely like an 85-year-old man, but I know what he means. I'm generally invested in dividend stocks and not really much in like AT&T, or sorry, much like Apple or Google's or what have you, which may have been to my demise over the past 5-10 years. But anyway, it's just what I feel comfortable with. But with respect to people flip-flopping, I think about this a lot, just about with being an engineer as well. I think most of the time we're trying our best with the experiences that we have. And when we invest, we get more experience. So every year that you have more money in the market, you're going to get something out of it, whether it's, well, I shouldn't have done that, or what have you. And you might also forget some things as well. But my investment strategy has completely changed from when I first started. In 2013, I was investing in, when I first started working full time, I was investing in penny stocks, looking to see if I could get 10% here, then put that money in somewhere else, get 10% there, and really jump around and try to trade. And what I realized was I would rather have something that was more consistent of returns. And then I started to think, well, what am I actually going for? And it's to pay for, bills and what have you. But anyway, I think what people do is they're uncertain with themselves. I have put a lot of thought and rigor into what I want and what I think some people, not trying to talk down on anybody, I think everyone's trying to do their best. But I think what some folks fail to recognize, and I guess this is something that I would highly take away from this live stream, and I think I talked about it in my previous one, is a lot of people immediately want to jump into the market. While I agree that jumping into the market with, say, $1,000, if you can afford to lose that, is the best education that you can get, even if you lose all of it, I think what people fail to do is they fail to sit down and try to understand what they're looking for. If you need that money in a year's time, I don't really recommend putting it into the stock market. If you're looking for money to grow over the next 20, 30 years, and you have high risk tolerance and you don't necessarily care if it's going to be capital appreciation or dividends, then I would probably look at something that's more high risk, high reward, like investing in technology companies or what have you. Not suggesting that anybody does that, but I'm just saying that if that's what your risk tolerance is and what you're looking for, then that might be more for you. But for me, I'm looking for stability. I'm looking for, in the next 20 to 30 years, be able to pay my money or pay my bills using dividend income. And so that's just what works for me. I'd rather consistently monthly pay into something and know that my income monthly is going up. I don't necessarily care if I have 25 million in the bank, 5 million in the bank, as long as I'm able to pay my dividend or get my dividend income. And you could easily, and I think one thing that people forget is it's not necessarily about how much capital you have in the market. It depends on multiple things. What are your expenses? What is your dividend yield? How safe is it? So I personally like to get to the point where I get to that $50,000 a year initially, and then slowly make the amount of dividend yield go down, because I think at the moment 4 to 4.5% is a pretty dangerous dividend yield. I'd rather see that number in the 2 to 3% range, where it's a little bit more secure. I'm not saying that a company that is investing or has provided a 3% dividend won't cut the dividend, but it's generally less likely that a company in that range will. And I know I'm kind of going on a tangent here, but I think all in all, people don't necessarily think long term about what they want their strategy to be and what they're looking to do, and so they might jump around. People might start, I don't want to talk badly about anybody, but there used to be a YouTuber who was starting a dividend portfolio and then immediately short-sightedly sold the portfolio so that they could pay off debt. If that was truly what they were thinking, they probably should have started paying off the debt way before they started investing in dividends, or, not saying that what they did was completely wrong, but at the same time, they were, anyway, kind of went off on a tangent, and I don't think I was necessarily making too much sense, but hopefully that somewhat helps. And how I relate that to what I do on a day-to-day basis is sometimes we make wrong decisions. Not everything, especially in investing, is right or wrong, especially in like engineering and when you're trying to make business decisions. There's never going to be a right or wrong answer. There's going to be a wrong, more wrong, right, and a more right answer. And sometimes the evidence that you have in front of you might steer you in one direction, and it might be the wrong side. or it might be the right side, or it might be the more right side, and it just happens to be what the evidence is in front of you at that moment. And unfortunately, sometimes with what you have in your previous experiences, which is what helps you make all your decisions, makes you make that wrong decision because you might not have had all the data at that point. So yeah, hopefully that helps, and it's a little bit philosophical as well. So apologies if some of it didn't make sense. Nuts. I don't change mine often. I had equity mainly. Trying to understand, but AA runs a computer program, and that's awesome, man. Do you do like so? Do you work in like San Francisco, or do you specifically work in a specific industry? I know financial technology is a big thing over the past year or so. A lot of those stocks like Square and Clover are really blowing up, as well as some other companies. Somebody I'm related to works for. I don't know. The company's changed hands about 3 different times over the past year and a half. So anyway, did Joel Boston leave? I was really hoping he would tell me why he was going to Southeast Asia, but because I completely forget. Oh, cool! I didn't know you were an engineer as well, Investor's Guide. That's awesome. I'd love more questions, guys. I'm running low on questions, and I don't. How do I say this? I don't want to just ramble on to something that doesn't make sense. I'm just like, when I talk about myself and try to come up with things that I think are relevant, it goes way downhill really quickly. So I'd really appreciate your questions so I can help at least talk about something that I think is worthwhile, or you think is worthwhile. Sorry. What do I think about target date funds? I think target date funds are great. I think so. Going back a little bit to the previous question and kind of combining these two about strategy and trying to understand what exactly people are trying to do. I feel like not seeing my hands, people will probably think I'm weird. So I'm going to do my palm showing so people can kind of see that. So I'm not intimidating and screaming at the camera. But specifically talking about target date funds. So one of the things that people ask me, they know I'm really into finance, and I really enjoy finance as well as an engineer, but people have recognized that, and they'll ask me because I think what some people think about is nobody knows what the right answer is, whether it's for investing and it kind of goes back to what I was saying a little bit earlier, people only know what their experience is. And so when people they hear about other people being into investing and actively investing and investing in individual securities like myself, they think they're doing something wrong because they're investing in, say, a target date fund or ETFs or what have you. But I think this all goes back to your strategy. If you are someone who doesn't want to ever really look at your portfolio, it's not important to you, it's not fun for you, and you just want to make your returns, I think investing in ETFs in target date funds is 100% what you should do. I forget exactly if what I'm going to say is correct, but I've said this on several videos. I think more so about 3 to 5 months ago. People asked me what I should do, and this combines the last question and this question, but I think there's 4 things you should do. You should understand what time horizon you want to be in, how actively you want to be trading, what risk tolerance do you have, and what your end goals are. And I think I might have missed something there. One of those might be removed and something might be added back in, but I think you're able to come up with those 4 things and answer those 4 things. You're going to be a lot better at answering what your strategy is. So if you're someone that I know, like a lot of the engineers that I know, generally just want to put their money away into ETFs, know that they're getting the best return that they can, and whether that's in a target date fund or the S&P 500, I'm 100% for that. But for me, I'd rather risk the 1% or so a year, even though I know in the long term that's going to hurt me. 1% return in the short term, because I enjoy doing it. So if I'm happier about what I'm doing as an investor and I'm only losing 1% or so, which generally has been about the case, I'm generally around what the market returns. I don't necessarily beat the market every year, but generally speaking, and especially in 2013, I did not beat the market, but because I was doing penny stocks. But I think everything is dependent on what your view of investing is. So just another what so going back to those four things I was talking about, it's not necessarily what your end goal is, but do you want to be someone that's passively or actively in the market? If you want to be passively, ETFs are your game, right? You just want to invest in ETFs. If you are going to be actively in the market, do you want to be focusing on swing trading? Do you want to be focusing on long-term trading? Do you want to be focusing on day trading? I mean, those are all key things, and people can make money in all those games. Stock market is not a one-size-fit-all sort of mentality. It depends on what you want to work for. And so dividend investing may not be for you if you want to make money quickly overnight. You might be wanting to focus on something like investing in 100% of your capital into Apple, or not saying that that's what you should do, because I'm not a financial advisor. I should never advise anybody to do that. But anyway, I think a lot can be determined on what kind of investor you want to be if you're able to answer those four questions. Whether you want to be passive, what you're looking for in investing, and what have you. So. Would I ever consider a change into that field, or just sticking out this career path? You mean in finance? Investor's Guide, do you mean sticking into finance, or do you mean, I guess you lost me. But I like what I do now at the moment. I wish I could talk more specifically about it, because there's a lot to talk about, but I do really enjoy being an engineer at the moment, and with what I do, I'm able to meet my purpose, which is to help people, kind of like why I do these investment videos, but also help come up with business decisions, evaluate projects that may make money for the organization. So it's a lot of fun. It's very much like investing. So I love investing, and I love what I do because it's very similar. I get to interact with people, help supply the world with stuff that they can use, and also anyway. That's cool. Mainframe computer programmer. Oh, okay. So I can answer this. So, Investor's Guide, I can answer this question. So, like I said, I really do enjoy what I do, but I think it's definitely within the top 5 of what I would want to be doing. Obviously, what I do at the moment, I'd want to own my own business and do something similar, because it'd be like doing investing, but doing it on my own and owning it myself. So, and then also in the past, I've thought about doing private equity, working for a bank, private equity, doing engineering for a private equity firm like Barclays or Goldman Sachs or something like that, which kind of gets more into the finance side, more into the mergers and acquisitions side of investment in engineering firms and stuff like that. And then also I've thought about just trying to start up franchises and stuff like that, and kind of become like my own little conglomerate. I have my own mental thought process of what like my perfect job would look like if I were to say be my own CEO and my own boss and have my own conglomerate, what it would be organized like. but it would involve real estate. It would involve my own um, personal business. Hopefully, if I was able to get one off the ground, that would also involve stocks and bonds, and maybe not so much bonds, but definitely stocks. It would also involve holding a decent bit more of cash in case any of those other three, like real estate, stocks, or my personal business, needed to be invested more capital. But anyway, I'm not going to get too much more into that, because hopefully when I get to the point over the next couple of years, if YouTube is still around, I'll make a video on that and hopefully be aiming towards getting more towards that. And that's more getting from my medium term to my long term goal and what I would do in that meantime when I'm more financially independent. So, Gretzky, that's awesome, man. Are you doing ETF investing or more individual stocks? You just answered the second part. Yeah, I guess. I don't know. Business decisions. So question, going into the military in the ROTC, we'll be making 40 to 50K a year for about 4 to 5 years. Ideally want to retire in 40 years with 2 to 5 million in assets. Suggestions. I'm not necessarily going to assassin engineer. What? So going back to the Reaper, I'm not necessarily a financial advisor, so I can't really give you suggestions, but I think what you need to realize is the 2 to 5 million in assets more what you're looking for, or are you looking for a monthly income to pay for your bills? Because I think if you're looking to retire in about 40 years, are you more concerned about what your big number is that's hanging above your head, or are you more concerned about what comes in monthly? And I think another part is, if you're really trying to plan, try to understand what your expenses are going to be. And this is something I have a problem with, because at the moment I live single. And so once I start having a family, or if I do end up having a family with wife and kids, will my expenses grow, or will I stop eating out so much and going out to bars so much? Not that I go out every night or anything like that, or even every weekend, but that sort of stuff adds up. Going out, going to bars, buying drinks, that sort of stuff adds up when you can just be buying like a Bud Light and drinking for like a dollar a beer at home. So would me getting married kind of offset me going out as much? And so my expenses would still be in the $45,000 to $50,000 range. I don't necessarily know, but hey. So I'm trying to give you an idea. I don't know if you're married, if you plan on having kids, if you have kids already, that might be something you want to plan into it as well. And obviously, you want to have like a buffer. Obviously, there's inflation and stuff like that to be considered as well, and that's when it starts getting pretty tricky. But I think what you need to recognize is, in my opinion, if you want to be a dividend investor, you need to be focusing on what your annual income is going to be, not necessarily what your portfolio size is going to be, and then you should aim your portfolio off of that. And if you want it to be more risky, I mean, you could retire easily with $1 million if you wanted to, if you're investing in things that pay 8 to 9% dividend yield, but it might not be the most safe. Having $2.5 million, you could easily retire on only getting around something that pays a 3% dividend yield, because you'd be getting about $60,000 to $80,000 a year if that was the case. I currently am aiming, just in like terms of dollar amount at the moment, in like the more mid to long term goal, about $2.5 million, because at a 4% dividend yield, that get me around $100,000 or so in terms of dividends a year. So then I can take that $100,000 or so, and I would have more than enough. I'd be financially independent and also have more to continue to invest if I want. Obviously, long-term goal, stretch goal is way more than $2.5 million. But obviously, I get to that $2.5 million just based off of saying, well, $100,000 a year and dividend income sounds nice. What's a decent yield that I can use? And 4% is that. So take that 100,000 divided by 4%, and you get 2.5 million. So, strictly blue chip individual stocks, only a few years in, but looking forward to seeing it grow. Awesome, man. Restaurants and bars are not as expensive as wife and kids. That's good feedback. Okay, so what I should have said was, getting married, having kids will be partially offset by not going out to restaurants and bars as much. But you're still going to go out to restaurants, but are you going to eat out every night? I don't know. But I 100% understand what you're saying. Can't actively add to it anymore. Have more control if I switch to an IRA. But yeah, what other questions you guys have? I'm impressed. Average watch time is like 7 minutes, which I don't know if I should be impressed by that or not. Chat rate, what is that? I'm just checking out some of these things on here. 91 playbacks. I'm just curious what all this stuff is. I don't really know. 185 a week invested for 40 years into something like that. Yeah. Theoretically. I would assume rule of 4%, so 80 to 100 or 200K a year. Yeah, that's a good goal, man. I mean, what I was always anticipating was getting to around 100,000. So me saying this honestly, I spent around $48,000 to $50,000 a year, and I don't really want for much. I mean, yeah, could I drive a Lamborghini? Who couldn't, right? But obviously I eat enough. I drink enough, not necessarily like alcoholic wise, but or alcohol wise, not alcoholic wise, but alcohol wise. I drink enough. I don't drink every night. But I'm able to buy a nice bottle of scotch every now and again, able to buy my cigars every now and again, not wanting for much. And that generally, me not really worrying about it too much. I was spending about $4,000 to $5,000 a month. So that's where I got the $48,000 a month, or $48,000 a year. If I were to, say, get a wife and kids, I probably wouldn't be eating out as much, and I probably wouldn't be buying as many cigars, and I probably would be buying more for the wife and kids. So I anticipated that my expenses would grow to about 80 to 100,000 and live pretty comfortably if I wanted to maintain a relatively same lifestyle. Obviously, there's some synergies associated with living with a spouse, so obviously you don't need to have 2 mortgages or 2 rents most of the time, unless you have an interesting marriage or live in different parts of the country and have a long-distance relationship or what have you. But anyway, you're able to buy in bulk, go to Costco, stuff like that. So I was anticipating 80 to 100,000 with kids and family would be comfortable, and so then that's why I got to the 2.5 million at 4%. So I'm around where you are, but of course my goal is to be much more than that. So investor's guide. So I generally speaking display my account amounts with people. I don't know how to do it on Livestream yet. Maybe I will eventually, but then there's also the problems with people being able to see the account numbers and what have you. But all in my videos, I talk about what is in what accounts and what have you, so that people can kind of look at it and hopefully you're able to go back and look and see what I'm invested in, and I generally believe that I'm one of the more transparent channels. And I'm not trying to downplay anybody, but I believe I talk more about what I'm investing in rather than things that I don't know about. I'm not trying to down talk anybody, but I think sometimes people's channels are kind of batting out of their league with respect to what they really know, and they're kind of just rambling on. I ramble on a lot as well, but at least I do that with trying to share my portfolio. And I'm not saying things to get a rise out of people or to get views that I'm not doing, if that makes sense. So when I say I'm getting $1,000 or this month, it's because I actually got $1,000 and I'm being transparent about it. So yeah, not trying to hide anything. So if you want to know anything about what my portfolio is in, feel free to look all up in the channel. And I've had videos now back into, was that 2016 when I started? It is. That's crazy. But yeah, I've been making videos for about 2.5, 3 years now. So hopefully you can find something that you're looking for. What do I aim for in dividend growth? I would say 8% makes me feel good. That's because it beats inflation, and then you're still able to get a little bit. I need to stop itching my nose. There's a little bit of a delay when you do live streams, and so I'll itch my nose, and I'm like, man, I itched my nose, and then I'll see it kind of pop up in the upper left-hand part of the screen, and I'm like, I need to stop itching my nose. But 8% makes me feel good. Anyway, Lord Bilbus, no problem, man. Glad to be on the live stream. It's only the second one I've ever done, so if you guys really like it, make sure you subscribe, and also tell your friends and what have you about it. What I always generally do, and this is kind of funny, and I'll get back to some of the questions, is I'll make a video and I'll talk and I'll be like, oh yeah, by the way, like, don't forget to subscribe. Whereas, like, I feel like so many other YouTubers, it's like the third or fourth thing that they say. So I'm like, am I doing something wrong? Like, should I be asking earlier in the video? And I'm not trying to just do it to get subscribers, but I think, honestly, some people are so enamored with the videos themselves, they forget to subscribe. It happens to me sometimes, and luckily things will show up in my feed, and I'm like, oh yeah, I haven't subscribed to this guy yet. Like, how can I not have? But yeah, so back to Reaper's question. I don't know why I think 8% dividend growth is for me, but I think 8% is reasonable. Of course, I'd invest in companies that do a little bit more, but it is what it is. Oh, cool. Yeah, I kind of misunderstood what you were saying, Investor's Guide. Do I have a sense of privacy issues? Yes, I have taken down a few videos because I have recognized that I might have been revealing too much. And sometimes I wonder if at some point I'm just going to shut it off entirely. Not the videos per se, but the complete transparency. And that's why I generally will try to stick to my Excel sheet more than doing things on like Fidelity or computer shares, because I think sometimes I'm giving too much. So we'll leave it at that. Who do I watch on YouTube? I try to watch a lot of people in my subscriber range. So I guess I'll start off with the big guys first. So I watch a lot of Grant Cardone, Richard Fain. I'm trying to understand whether or not I like him or believe him a lot. I obviously had to believe him because he has the cars and stuff like that, but I don't know if he's just gotten lucky. I mean, he obviously works hard, so don't get me wrong on that, but I don't necessarily believe everything he says. Sometimes I watch Graham Stephan. I think he's doing really well for himself. I used to watch Jeremy or Financial Education a lot more. I've leaned away towards it because I think he's more of a trader, not like trader like he's going against something, but trader as in like he does a lot more active investing, and I generally more buy and hold. I do trade and sell things every once in a while, but I think he's more of an active trader, which isn't necessarily my style. But he is entertaining. But sometimes I think he's too concentrated on so few stocks sometimes I get bored with him. PPC Ian, obviously, I love his content. He's an inspiration to me. I wish that was someone I could have more of a conversation with to try to understand how much he's investing monthly and what his total portfolio size is. I get a lot of inspiration from him, and he does a really good job one on the portfolio and demonstrating and articulating his material, and two, I believe I started watching some of his videos when he was like 700 subscribers or so, back in like, I don't know, way back when. And he talked a little bit about, I think he like had vending machine videos at one point, I think, and that's maybe why I started seeing him. Um, and then he started talking about investing, but I didn't. He was like walking on the street, I believe, in like downtown San Francisco or something, and I was like, "What is he talking about?" Um, but then he started coming out with really quality content, and next thing you know, he was up to like 30,000 subscribers. So PPC Ian can continue to do great, and that you're an inspiration to us all, and you're really giving us good education. But in terms of smaller investors, so Dividend Grinder, I really like chatting back and forth. It's because he's a fellow Pennsylvanian. Um, Kevin Vest, I like watching. Passive income investor, or maybe it's passive income Tom. One of those guys, he's doing really well. Passive income Tom or passive income investor, I don't remember which it is, but he has a couple rental properties, so that's a little bit interesting. I like to check in on that as well. I'm trying to think. Dr. Dividend every once in a while, but he kind of fell off earlier this year. He hasn't been making as much content. Um, no hit on him. I can understand. Sometimes I go on a hiatus every once in a while as well. Um, Sometimes I question what I'm doing on YouTube. I love what I'm doing. I've been talking now for over an hour. I really enjoy doing this stuff, but sometimes it's like, well, what am I doing? Is it even worthwhile? Do people even care? Does it? Not that like that matters if people care, but it's kind of like sometimes I get lazy. Sometimes I'm like maybe I should be focusing on other things. Um, anyway, uh, do you sell covered calls on your positions, and why or why not? So STN86, I've sold covered calls in the past. Um, I generally steer against doing that because in the past I've not done well with them. Um, so yeah, I'm not. Maybe I would do better with time, but I generally don't do well with options. I've made money. I've lost money. I'd say now with some of the um, options that I've sold, the calls that I've sold. Um, are they calls? Are they puts? No, they're calls. Some of the calls that I've bought, yeah, ended up being $500, $1,000, and they ended up being worthless. So I think at this point I'm break even, if not a little bit down, on all my options trading as a whole. So until I get better experience or understand a little bit more, I generally steer away from uh, calls and puts. Um, with people who may watch your videos that know you in your personal life. Um, yeah, there are a select few folks that I know in personal life that do watch my videos. I don't have that large of a subscriber base at the moment. It's close to 3,000, so thanks for those of you that are following. It means a lot. It's hard to believe sometimes that 3,000 people would listen to me ever talk, but uh, it does sometimes get weary. Sometimes people make a big deal out of it. Sometimes there's people that are like, "Hey, I watched your video," and I'm like, "You're one of the last people I'd want to know, or that watched my video." Not to say that I dislike them, but I think what bothers me the most about people watching my videos is there are people that, thankfully, in the chat on the right, say that I inspire them, and I'm not doing it to inspire them. I'm not doing it to have people look at me in awe. I'm doing it to hopefully help cheerlead and get people into the right mindset. And I think what sometimes people immediately think about is, I think a lot of times in the dividend community, we are very much cheerleaders for each other. But I think sometimes people that watch my videos because they know who I am, not necessarily for being in that cheerleading dividend growth mindset, will look negatively upon the videos, and that doesn't necessarily bother me. It's the fact that they're quick to dismiss something and they don't really get the point. I'm not doing this to say, hey, look, I have $300,000. I'm doing this to say, look, this is where I am. This is, if you guys continue to invest over the past 6 years, you can do this. And, this is how you can do it. If I wanted to, I could be making, $20,000 a year in dividends and buy only 8% dividend stocks. But I'm doing what I'm doing because I believe it's right for me, not necessarily right for other people. So I hope I'm making sense here, but the thing that bothers me most about making these videos is that people that know me in real life, it's because they don't watch the videos because they want to watch the videos. They watch the videos because they know me, and that might mean that they miss the message, if that makes sense. So hopefully that helped. Familiar with energy transfer ET? I am not. Do you dollar cost average? I do. One of my best investments was BHP, which was dollar cost averaging. I started buying BHP when it was in the 30s, then I dipped down to the 20s, and dipped down to the teens, and I bought every single time because I said, well, if BHP, one of the best minerals and natural resource companies, goes bankrupt in 2014, then all of them are going bankrupt, and I was correct, and that was probably my best investment yet, and it pays, and actually they're going to pay out a record dividend yield. Was it a record dividend too? Anyway, they're going to pay out a lot in dividends this year. So yeah. All right, man. Yeah, $500 a month in dividends is great. You're right behind me. I remember making videos like last year, talking about $500 a month in dividends. So you're right there, man. So Reaper, if you don't mind, I'm going to read your question out loud. Currently in college, about $25,000 in debt, and we'll be taking a commission next year. So $35,000 to $40,000 in debt. When that happens, with the rest of my schooling, it will be free for the next 3 years. With a 7% interest rate per year, the ROTC program offers $5,000 a year during school time. So if it was you, would you pay off loans? I have a 10-year repayment plan. First, so would you pay off loans first, invest, because you could pay it off quickly in the military, or do 50-50? So I'm no financial advisor, and I hate to keep saying this, but 7% interest rate a year is pretty high. I think that it really depends on what you feel best about. I think in terms of this question, I'm going to defer you to Dave Ramsey. Not because I necessarily agree with everything that Dave Ramsey says, but because he says, like, don't even think about investing unless you're debt free. I'm more of a, if you're paying 2 to 3% on a car loan, and you honestly want to invest, I'm 100% for that. So I think he takes it to the extreme because of what happened to him. I think he got into some trouble and ended up, close to bankrupt, if not bankrupt. And so he went from like over leveraging himself to not leveraging at all and having zero debt, and only buying things if he could buy them in cash. I'm more in the middle where I'm like, it really depends. But 7% is high. And for me personally, man, I would try to pay off that 7% interest rate as much as possible. That's scary. So that's all I'll say about that. Oh, cool. You invest in Fidelity as well. That's awesome. 3 message question. Yeah. Okay, so I'll go a little bit more into your question, the Reaper. Hopefully you're still here. I can't see who's exactly in here, but I assume you're still here. I personally, I don't know if I would say 100% pay down the debt because I'm a big proponent in investing, and I think also having any sort of money in the market, you'll get a big education associated with that. You might lose a little bit of money as well, but you'll be able to understand what maybe your strategy is if it's working out for you. And I think you said you already have a decent amount of stock, or you're at least starting to get some stock. So anyway, I'm more prone to paying off more of that 7%. That 7% is scary, but you think about it, that 7% and that loan won't change in value. So it's not going to be impacted by inflation at all. So if that makes sense, in 10 years, you're still going to be paying, let's just say, $700 a month. Whereas if you're investing, that's going to change with inflation, right? So those dollars are going to be more prone to either grow or deflate, depending on what inflation looks like. So I would say I would lean towards more of a balanced approach, but I'm terrified by that 7% because that's scary. Anyway, ton of channels these days. I agree. There's lots of channels. I thought 2.5 years ago there was a lot less financial channels, and some of them blew up really quick. Like PPC Ian blew up really quick. Financial education blew up really quick. I'm in grinding, and I think that they're more comfortable about getting in front of the camera and talking about things that may be more relevant, whereas I'm talking more about my progress, and I think that sometimes that might come off as conceited. But I do believe, hopefully, that it helps people more with the mindset shift, whereas I think what happens with some of those other guys, not PPC Ian, of course, I think that he helps with the mindset shift as well, but some people like Financial Education, and no disrespect towards him, but I think that they, I don't want to say radicalize things to get views, but they do it because it's in the news and it's relevant, and so they know that people will watch. So, and Jeremy, he puts a video out every day, and knowing, he puts out at least a 5-minute video every day, and I know that that's not easy, especially thinking about it, writing it up, everything up on the board, and what have you. I mean, 5 minutes plus editing, I mean, that easily turns into probably close to an hour, to be 100% honest with you. So, anyway. Prior to starting your channel, I used to watch a channel going over dividend stocks and switched 2017 to dividends. Awesome, man. I didn't know. Well, I don't know if you're saying I helped you switch to dividends or it helped you switch, but either way, it's a compliment, and I appreciate it. We're going to do some stock picks in the future. I'll give you guys stock picks. I've made videos in the past saying I've bought X, Y, and Z, but yeah, maybe in the future I'll do more specifically on anything. Investor's Guide, thank you. I know you probably already got off at that point, but anyway, thanks. Thomas Wester Bennett, I am happy with the move. Beautiful country, beautiful people, great food. If you're ever in Trinidad, make sure you get local Trinidadian food. It is phenomenal. The Chinese food is phenomenal, well flavored, spiced. I've now recognized that we don't use enough spices in the United States. People here are great. Driving on a different side of the road is interesting as well. But I do have a skewed view because I do have an apartment paid for me at the moment. And not saying that it wouldn't be a beautiful country if I didn't have the apartment. It's still a beautiful country. Love the roads, or the driving on the roads. Beautiful place. More mountainous than I thought. But anyway, this has been a phenomenal experience so far. I'm really hoping that I really hit the ground running in the next couple days with work, because I feel like just being here personally has been a great opportunity for me, but I feel like I haven't contributed enough at my job at the moment. And it's not to say that I haven't been working. I have. It's just coming into a new area, new data, different part of the business, different region. Things are done differently, and I'm trying to learn how people do things differently, as well as add value to what I do. So um, that's I felt like from a personal standpoint, being a relatively untraveled individual, I'm really getting a lot on the personal side, but from a business side, I want to make sure that over the next, I guess, 49 weeks, I'm able to add as much value as I feel like I've gotten on a personal level. So, Gen X dividend investor, I apologize. You probably already got off, but thanks for staying up with me. When did I have that light bulb moment regarding dividend investing? Um, this is Thomas Wester Bennett asking. Um, I think what it was, I didn't lose a lot of money investing in penny stocks in 2013 and early 2014. I think I just recognized, like, through my experience, what made me the most excited. And then I think what I saw was that I think I just continued to dive deeper into investing. It was something that I thought was interesting. And I taught a lot of this myself, not saying, not trying to brag, but I read a lot of this myself. My family isn't really invested my immediate family, the six of us, weren't ever really into investing in the market growing up. And so I really only got into it about 6 years ago. And reading up on it and reading the financial articles, I got a lot of enthusiasm, or not enthusiasm. I got a lot of joy out of doing that. And so I'm a believer that every couple hours you should do 10 to 15 minutes of reading to yourself. And what I would do is I would generally pull up Seeking Alpha or something along those lines and read about investing and what have you. And so it just continued to make me more joyous. And of course, like anything, you try to knock it out of the park, find that one stock initially. Yeah. I mean, I think everyone does that. Like, oh, if I can just find the next Apple, if I can just find the next Netflix. And, sometimes you'll break even or what have you. And I remember it being like Rexon Pharmaceuticals, RNN is the ticker symbol, and like Cannabis Science, CBIS, and just watching it go up 1%, go down 1%, and all stocks do that. They go up, they go down. But I think one of the things that I was just like, well, even if a stock goes sideways, a dividend stock still pays you. And then I think I started looking into so anyway, I think it was late 2014 when that light bulb finally went off in 2015, where I actually started being like, this is my goal. And then it took a year and a half to be like, I think what it was me smoking a lot of cigars on the porch, and trying to understand what I'm going to do with the money that I'm making, because I was making way more than I was spending. Because fortunately, I'm blessed in that department, and worked hard to get where I'm at. And had good education. I was good opportunity provided to me, and I took that chance and that opportunity. So anyway, needed to figure out what I was going to do with the money, and landed on dividend investing after some trial and error. So that is what it is. Reaper, hopefully you didn't sign off already. Last question. Moving day is tomorrow. Also, 7% is nothing. A good friend of mine has student loans for $75K at 12%. And he says that's nothing. Wow. You're going to school as a chemical engineer, oil, petrochemical industry in 20 to 30 years after I'm done in the military. I want to go into that field of work. Hey, Retro Snack. Going to see how far I get into the military, so student loans shouldn't be an issue. That's true. More so with hazard pay as a officer and a clear pathway for promotion. Agreed. Is that it? Okay, so let me scroll back up. Did I miss something? So being a chemical engineer, I think being a chemical engineer is probably better. I know a lot of engineers now. Luckily for me, wow, I've been online for an hour and a half. So thank you guys for bearing with me. Crazy. Um, I would say that chemical and mechanical engineering is probably the best one to do, even if you plan on going into the petrochemical or oil industry. Um, I believe that if you were to be going into that industry in 5 to 10 years, you probably should be okay. But I believe out in the 2030, 2040 timeframe, in this, I think that we'll be transitioning more to gas, and I believe half of our energy probably will be provided by renewable energy at that point, because I think it's growing at about 5 to 10% a year, maybe 20% a year. I don't even remember. But oil and gas is only growing at about 2%. But I think if you're a mechanical or chemical engineer, those are always going to be valuable trades. So those aren't necessarily too specific. And I know some people that do, like, I don't want to say biomedical engineering, but I'll just say use biomedical engineering, and they're kind of stuck. Whereas, like, what's another one? It's like if you do what's a good term? I forget one of the engineerings. It's like if you do aeronautical engineering versus like aerospace engineering. But one of them is specifically towards space flight. Um, then you're limited to only space flight. But one of them is like I think it's aeronautical. If you do aeronautical, you can do space flight or like regular airplanes. So just try to think about it. It's like, yeah, you might want to do, and I wish I could talk about this a little bit more, but it might be divulging too much. But so I work with a lot of engineers, and some of them are specialized, some of them are not, and economy goes up and down, and sometimes there's layoffs. So if you are a chemical engineer or a mechanical engineer, you can go into the auto industry, you can go into whatever industry, you can go work for BASF, you could work for Boeing, you could work for 3M. If you're mechanical, you could work for SpaceX. So it's like that's a really safe bet. I'm not trying to convince you to switch to mechanical, but chemical is a really good field as well, and I know that you can work across a multitude of industries. And so if you're uncertain, I agree that oil and gas industry pays really well, so that's really enticing as well. But I think that you should try to understand where your passion lies and what you want to be doing in terms of, at the end of the day, are you going to be happy with what you're contributing to? Because if it doesn't make you feel good on the inside, you might just look at it too much of as a job. Anyway, hopefully that was helpful. But you probably already signed off at this point. So, financial investor, excuse me. Channel's designed towards a journey, lessons we have learned, a psychology, which is more fun for me versus doing a technical video. Thanks, man. That means a lot. That's kind of what I'm going for, so thank you. It was really well articulated. Retro Snack, hello. Retro Snack, cost of living change. Housing in Trinidad and Tobago is expensive. I'm not sure if that's just because it's more scarce. If it costs more to build, I think it does. But I think it's also, if you want certain things, they don't make a lot of things. Well, they do make some things in Trinidad and Tobago. I'm not going to say they don't make anything, but some things that they might not necessarily have the factories for. So you think about it, it's about 0.3% the population of the U.S. So it's 1.4 million people versus 350 million people, and so they don't make everything on the island, and so they'll have to bring in some stuff by sea or by airplane, and so that would drive up costs just because of that reason. And it's not just like you're shipping a bag of goods like chips or something like that. You're garage doors or regular doors or doorknobs, so things that are abnormally shaped, obscurely shaped, or very long, very wide. And so I think that housing is expensive, and also groceries are a little bit more expensive than I thought as well, by about 20% or so. And I'm still trying to figure out mentally if that is my personal bias, because I'm still buying a lot of American-like things, and so that being said, those are imported. Like for instance, I'm still buying Coca-Cola and you know Frito-Lay materials, or not materials, Frito-Lay snacks, which are made by Pepsi, and so those are probably imported as well. Um, so the only other thing that jumped out as well to me is the milk. So I think they truly, I don't want to use the wrong word, but they heat the milk so they kill all the microorganisms within the milk. And so that being said, that means that their milk isn't necessarily refrigerated, which that was kind of confusing to me at first. I was just like, so is it like regular milk? And if like they don't sell it, they have to throw it away? And so I was walking down the milk aisle, and none of it was refrigerated, and that was really interesting to me. And then I started doing some research on it last night, and it just is because they heat it up. And they kill all the microorganisms so that it can have a longer shelf life. So interesting to know, but now you know. What do I do professionally? I'm an engineer. That's all I'll really say about that. Hey, Ron, thanks for stopping by, man. I know you've been on here quite some time. I've been on over an hour and a half, so thanks for stopping by. Yeah, I'll have to check out your videos, man. I think I remember watching a couple of them, but I don't remember exactly what you've done, so I need to check in. Thomas Worstrup, very well aware that my own worst enemy is when I'm investing. The constant drumbeat of negativity is affecting my investing behavior. How do you overcome the noise and stay the course? I listen to people that are a lot smarter than I am, or maybe not smarter is the right word, but have a lot more experience than I do. And that's people like Warren Buffett and other folks. And so I think the hardest thing about anything in this world is, and this has to do with my job as well, is sometimes there's so much data that things start to contradict each other. And that happens a lot in the investing world. And I think it all comes down to, what are your goals? And if you have a true belief in your goals and you're truly set in what your goals are, then you can overcome anything. Maybe not anything, but you can come over most things that are within your control. And so I think initially what I was doing was I was really putting my emotions at bay, or I was not putting my emotions at bay initially when I started investing. And I've started to realize that if other people can do it, so can I. And then I started to realize that I can really start to do that if I understand and truly have a deep belief in what I want to be doing, which is dividend investing. So surprised that it doesn't come from Mexico. Yeah, I don't know. Maybe it does. How much do I think it'll change my savings rate? So I do get paid a little bit more for being down here, just because cost of living I think is a little bit more expensive. But then also they pay for my apartment. So immediately off the bat, I would say another $1,500 a month, just based off the apartment not having to be paid for. But also, I do want to do some traveling, so I think that maybe it'll be partially offset. Um, so we'll see. I'm still kind of curious because there was some costs associated with the move that obviously I get paid back for. So there was some things that like obviously I would pay for, but the company gives me kind of a not a blank check, but the company pays me a lump sum that I knew of before. So I was like, okay, I'll do that. I'll do this, knowing full well that I would take that cost up front and the company would eventually pay for it in the coming months. Um, but yeah, I think until I get like in the next routine, I would say until like August or the end of August, so beginning of September and early October, I'd really be able to answer that question. But I think it'll bump it by about 10%. I don't think it'll go from like 40, 50% to like 60, 70%. But I think it'll bump it, say from 40 to 50 or 50 to 60%. I don't remember exactly where I'm at. And it's hard for me to remember because I do end up having to pay a lot in taxes as well. And so I think I generally try to get about $4,000 a month in to the accounts, and not including company matches and stuff like that. I think overall, because I do about 600 through the Roth IRA, 500, 600 through the Roth IRA, 500, I guess, at least 1,500 a month in my individual brokerage account. I think at least 1,400 into my 401k. So that in total is about 3,000, 3,500 there, right? No, sorry. 500 plus 1,500 is 2,000. I think I lost myself. Plus another 1,500 into the 401k, so that's 3,500, and then probably another 500 to 1,000 whenever I see the checking account gets a little full. So I generally get to about 4,000 a month into the portfolio, so which is pretty crazy. That means I'm adding about 1.3% every month in the portfolio. So have a good evening, man. Thomas West Bennett. Lord Bilbus. So in the medium term, the goal is to strictly have my dividend income match my expenses. More beyond the medium to the long term, I hope to get closer to about $1 million in dividend income on a yearly basis. But I haven't planned that far in advance. And I think over the next year or two, when I get more concrete on how quickly I can move in terms of really going up the curve, because at this point the portfolio is getting pretty large. It's I'm heading towards about $500,000 here. I'm still quite a bit of ways away, but it's within reaching distance within the next couple of years. But you think about it, 10% growth on $500,000 is 50,000. So of course that's helpful if the market goes up, but if it doesn't, I have to supplement that via investing on my own money. That ends up being a pretty big chunk of change that has to come out of my pocket. And so you think about it, I'm trying my best to invest about 4,000 a month now. If that's the case, and I need to invest 50 grand, then that's 11 months or so, maybe even more of investing. So maybe even closer to 12 months of investing. So it gets pretty difficult, and that's just increasing it by 10%. I'm trying to continue to increase it by 20 to 30% per year over the next couple of years. So you can start to see the numbers start to get pretty big over the next couple of years, and really trying to understand. Anyway, what gave me the courage to be so public about my finances? Because it's a journey, and I've recognized that people like talking about it. And you guys don't necessarily know who I am per se, so I might have a face and I might show you guys my finances, but also I think I'm going about it differently instead of just putting it in front of your face and trying to brag, what I'm trying to do is be educational about it. And so I'm hoping that this inspires others, just like I've been inspired by others. And so I think what it was is reading a lot from Seeking Alpha, and I thought that making YouTube videos was fun. And I didn't originally start off doing finance videos. I originally started doing off cigar smoking videos because I really enjoy cigars as well. But those weren't getting the views I wanted, and also some of the people were rather strange. So at that point, I was doing videos on one of the things that I really enjoyed, which is cigars. And then at that, I was also really getting into investing at that time as well. At that point, my portfolio had been focusing on dividend investing for about 1.5 to 2 years. And so in December, January 2016, 2017, I was starting to get to the point where I was like, wow, this is kind of impressive. And I think other people would want to know about this. And so I started making videos, and I was just starting to do it to kind of walk through it on my own and really document my own progress to see what I was really enjoying, and being like, wow, I'm making, I think there's a video on here on my channel, $200 a month in dividends. And I'm like, $200 a month? I mean, that's, 2 cell phones, or, a cell phone bill and going out to dinner one night, or, a nice dinner, not just like McDonald's or something like that. And then I was like, wow, $300 a month. And so a lot of people were really encouraging. And I think one of the things that scared me initially about YouTube and also being on in front of the camera is people. Sometimes you go on videos and people are rather rude. So sometimes when you get into those videos that people have like 2 million, 3 million views, you go into the comments and you're like, wow, these people are straight rude. But what helped me continue is the motivation that everyone's really giving each other. You just see not many people have wrote anything negative in this live chat at all, and now I'm probably going to jinx it, and people are going to start messaging pretty inappropriate stuff. But we're all here because we want to learn. We're all here because we're trying to do our best, and we're all here because we want to better ourselves. So for not just us, but our family as well. So anyway, yeah, hopefully that's helpful. I feel like most of my friends don't want to listen or don't want to learn about personal finance. Do you have people in your life you wish you could help with? Yeah, I have that experience as well. So I have people that listen, and I have people that are interested. So I guess I will classify people as 3 different ways. I have people that will come up to me and ask for my opinion about things, and I'll try to sit down with them and try to get them on the basic foundation. And some people will listen, and some people will really take onto it and start their own opinions and start their own way. And I think that's awesome. I'm really about that. Then I'll have people that will love to listen to me, and then just when it comes to it, and there's one person in particular, love them to death, but still don't understand it. They'll love to listen to me, talk to me about it, but then when it actually comes to action with that person, they just unfortunately just don't follow through. And I think it's sometimes just the uncertainty. I've been told, I don't necessarily believe this about myself, but I've been told when I say things, I say them with a lot of confidence. And so it gives other people a decent amount of confidence, whether it's right or wrong. Sometimes that's a pretty negative thing. But anyway, and then there's a third type of person that I'll try my best to explain it to them. They'll complain about their problems, whether it's money, financially, what have you, and I try to get them on the right direction, but they just don't want to hear it. And sometimes they'll be in between that person that just doesn't want to hear it, or they'll listen and they'll think that it's interesting, but then they won't follow through. Even something as simple as like, don't pay off your car early, don't accelerate payments on your car because it's only at 3%. You have credit card debt that is 12 to 20%. Pay off that first, and then go back to the car if you want to accelerate payments. and they'll just be like, well, the one's bigger than the other, the minimum payment on that one's bigger than the other. So, and they're just, because they're so busy with other things and because their experiences don't allow them to understand. I'm not saying that they're dumb, but by no means am I saying that they're dumb. It's just they haven't had the financial education or done the research themselves or been interested enough. And so, unfortunately, they're just paying the price for that. So, hopefully that was helpful. Retro Snack. So, Lord Bilbis, I agree with you. It's fun seeing your dividends grow. It's fun to know that unless some crazy financial crisis happens, I'm going to get $10,000 next year just by dividend investing, and hopefully some of the companies will grow it. And if I do get that 8% dividend growth, I'll be making $11,000 next year without even really doing anything other than the companies continuing to pay me. So you can see that, just in a couple of years, 10, 20 years, even if I'm just getting that 8% dividend growth, I don't even invest anything into the portfolio, I'll be easily making $20,000 to $30,000 in dividends without adding any more capital. Of course, some of that will be offset by inflation, and so that 20, 30,000 actually 20, 30,000. No, maybe it'll be like 15 to 20,000. But anyway, it's interesting. But the way I look at it is when the market value goes down. Generally speaking, most of the companies don't quit paying the dividend. And I made a video about this. So in 2008, when the financial crisis happened, everyone was so concerned about how the market went down 60% from its peak to its trough, right? But dividend payments only went down 25 to 30%. So they only went down about half as much. And within a year and a half, dividend payments were right back up to where they were in 2007 before all the financial crisis happened. So if you think about it, during that year and a half, you were able to buy dividend stocks and continue to increase your dividends without really risking too much of your total portfolio. So probably didn't word that last part 100% correct, but you're able to purchase dividend-paying stocks at a cheaper price, even though total dividends didn't really go down nearly as much, maybe not even half as much. So, yeah, no problem, Retro Snack. I do this for my own. I mean, I love talking about this stuff, and you guys are really the only people that want to talk to it about it with me. And unfortunately, some of the other people that would are living in the U.S. at the moment. So we need to find some folks down here that are into personal finance, and maybe I'll hang out, smoke cigars on the balcony back there, and talk about it. How do you feel about Canadian bank stocks, TD, and Bank of Nova Scotia? I think that, and this is coming from MG, severely undervalued. Sorry, my voice cracked there. Severely undervalued at the moment. I own Bank of Nova Scotia, so full disclosure on that. But yeah, I generally, this might be a twofer, two questions or two answers in one. I generally look for companies that pay that have a price to cash flow ratio of about 10, especially for financial stocks. So companies like Wells Fargo, Bank of Nova Scotia, all really good stocks. TD I thought was a little bit overvalued, but they are doing really well in terms of capital appreciation. So it is what it is. Lumberjack just says 25, starting his engineering career, will be debt free in December. Happy to have found my channel, starting his own portfolios and starting his own journey. Hey man, if you create videos, let me know. I will definitely be down to watch that and be a subscriber. So, are you? I guess hopefully you didn't log off already, but let me know if you're going to make a channel. I would love, even if it's $100 a month. And dividend income, I would love to watch it. Yeah, man. Lord Bilbus, I hear you. Yeah, people in my family, my immediate family, same thing. They were like, "Hey, I paid off my car," and I'm like, "What, are you still paying your credit card?" And they're like, "Yeah," and I'm like, "Well, you could be paying 2% on your car, 3% on your car, but instead you are paying 12 to 20% on your credit card." So it is what it is. You can, so yeah, I mean, you could lead a horse to water, but you can't make them drink. And sometimes I think it's difficult for us um, to be patient with people, especially because we have so much passion for personal finance. So sometimes you just have to be patient, and you know, I think what happens is because of your immediate family sometimes or your friends, they don't want to hear it from you, but if they heard it from somebody else, they might change their mind. But also, sometimes it's a mindset shift, and I'm a firm believer. I forget who what I think Alex Becker said this is you personally do not make any decisions. So that might be surprising to some people. But your decisions are really made by all the cumulative experiences that you've had throughout your life that make you perceive and create the perception that you are personally choosing that. So I think that was relatively interesting. And at first I was just like, what is he talking about? And then I started to understand. It's just like, well, because you have a different experience with somebody else, it might make you make a different decision. You are interpreting data or data points that are being taken a certain way because you have experience with that data or whatever. You might choose a different route than if somebody else has different experience. So is what it is. But Mr. Bojangles, haven't seen you in a minute. But anyway, I think I've been on for almost 2 hours now. So if you guys have any final questions, I'm more than happy. This one was about an hour and 20 minutes longer than my last one. I don't want you guys to just sign off here, but like you guys each to have a good question. So I'll give it a little bit, see if anybody comes up with any good questions. But yeah, I agree with you. Apple marketing to students. Not saying that Apple's a bad company, but yeah, Bojangles. I know. I haven't seen you in the comments section though. Hurt me. I thought you unsubscribed. Every once in a while. So every once in a while, I'll put out a video, and in the analytics, you can see how many people subscribe because of this video. And sometimes there's some videos that I put out which might be a little controversial. Like when I made the video that I was moving to Trinidad, I lost subscribers because of that. So I just assumed one of them was Mr. Bojangles because he used to be my friend and he used to comment on like every video, and then just went on a hiatus. But I've been talking for 2 hours, so he finally decided to show up. I'm just messing with you, man. Thanks, man. That means a lot. Ernesto, what's going on? Where do I find info about companies I want to invest in, and what do I look for? That's a good question. So Logan 4. So what I used to always evaluate back before I was, I guess, more educated on investing. Not saying I'm fully educated or anything, but before I had more experience, is I was always looking for the price to earnings ratio. What I soon realized was earnings can be manipulated by tax one-offs, by what have you. So a company could, quote unquote, actually lose money one year in terms of earnings, but that is strictly for like general accounting practices, right? If you actually look at what the company takes in its cash register, its operating cash or what have you, that is gold. You can't really take that away. And so I think sometimes what people see is they'll look at earnings per share and be like, oh, it's going up, it's going down. But that can be manipulated by taxes and write-offs and stuff like that. I think what people need to more so look at is the balance sheet and the cash flow statements. The cash flow is going up. that's positive. If they're paying off debt, what have you, that's positive. Look for those sort of things. Don't necessarily look at earnings per share because that can get manipulated positively and negatively by taxes and write-offs and what have you. But specifically talking about like bank stocks, I'll look for like price to cash flow. For real estate investment trusts, I'll look for price to funds from operation or price to adjusted funds from operation, what have you. So hopefully that was helpful. When's the next update video coming? Update for what, like monthly dividends or for total dividends that I'm going to be expecting? Or because we got 9 more months or 9 more days in August before I can write my official August video. Because there is a little bit of oh, by the way, if you guys are ever in Trinidad and Tobago, this stuff is phenomenal. It's like literally just like lime and like sugar, but oh my god, I love it. When's the next update coming? Travel for work a lot. Yeah, I watch Dividend Grinder. Him and I are both Pennsylvanians, so I like to give him crap and ask him why he hasn't come out to like do a Google Hangout or anything like that. But that reminds me, if any of you guys want to do like a Google Hangout and have a conversation like that instead, let me know and like comment on this video or something like that. Don't do this on the live. Don't do it on the live chat because I think that goes away. But yeah, message me on like a video or something like that, and we can try to figure out if we can do like a Google Hangout and live stream that because people might have a cooler conversation instead of just having me on the camera. It'd be having 2 people and having a conversation like that, which would be probably cooler than just this way. And I wanted to also do that with like another guy that I met when I was in Mexico. I met an Instagram influencer who's traveling the world. And I was like, dude, like let's do a podcast and do a Google Hangout. And for some reason, I'll like mention it to him. He'd be like, yeah, man, let's do it this week. And then it just falls through. So I need to be more adamant about doing that because I think that would be really cool to add to the channel. And if you want to watch it, you can watch it. If you just want to wait for the dividend video, that's cool too. Will I do a stock pick before I purchase a stock? Maybe. Oh, Ernesto, yeah. I saw your name pop up on my Shopify. That's awesome. For those of you that don't know, I'll write this. So a lot of people, and some of you guys might be like, oh, you're trying to plug your Shopify store. Yes and no. I'm really proud of this spreadsheet. A lot of people asked me about it over many years, and I told people that I would try my best to create a simplified version of my dividend tracker that I use, my Excel workbook, and so some of you guys will know what I'm talking about. And so I put it up on my Shopify store for $1. And Ernesto, thank you for reminding me as well. And really, it's not to be making so much money. At the end of the day, when I sell something for $1, actually after credit card fees and stuff like that, I only generally walk away with like 67 cents. And all that money is going to basically the Shopify store because I have to pay like $30 a month or something like that for the Shopify store. And I've only sold about 22 spreadsheets so far. Not trying to get you guys to feel bad or anything, but I'm doing it so you guys can get it and download it and also can have a better consistent product. So anyway, and not to say that if you guys get it and you don't like it, that's fine. Tell me what you don't like about it, and I can try my best to edit it in. Because if you don't like it, somebody else probably doesn't like it either, and it might just be my weird mindset for some reason that I like it as opposed to something else. So Thanks. Do I look at earnings before taxes, depreciation, and amortization? Yes and no. I look at ops cash. Ops cash is really big for oil companies. I invest a lot in oil companies. So I look at ops cash. I look at cash flow. I look at where it's going. Is it going to debt? Because I think what a lot of people look for is they look at payout ratio for dividend investing. And I hope that this makes sense. So a lot of people look at payout ratio for dividend investing. And when payout ratio is what you're looking at, it looks at earnings. And so earnings can go down by taxes or something to the negative range, even though the company still was cash flow positive, if that makes sense. And so earnings might be negative because of, say, a write-off or a casualty or a safety event. And so they write off something because of that for future earnings or what have you. But in terms of positive ops cash, anyway, they do that because when people are able to depreciate things against their earnings, they get taxed less. So let's say for oil and gas company, for instance, for every barrel of oil they make, they get to write off, a portion of that to how much capital expenditure they've invested into that, and they get a tax break associated with it. Just like BHP, every metric ton of nickel, they get to depreciate a portion of that for depletion costs because they invested so much into the mine. It costs money to operate the mine, and so they get somewhat of a tax break, for a portion of what that nickel is worth, because otherwise they're getting taxed on all of it. So anyway, so I have a video talking about the spreadsheet here. Let me pull it up for you and post it if you're interested. Stay on the live stream, of course, because I'm about to wrap up. But let me pull up the actual sheet itself. Everyone, so the day for a lot of you has come. Ignore my double voice, but this is the actual video where I talk about what's in the spreadsheet, and you could even, to be honest, make your own spreadsheet and avoid paying the dollar that it costs to download it. And I think some people have done that because some people are like, I don't want to buy your spreadsheet, tell me how to make it from scratch, which I think is kind of funny. But it's like by the time you actually watch the video, recreate it from scratch, it's like I would have just paid $1. And so at the moment, I'm trying to make it relatively affordable, trying to decide. To be honest, I think because I'm charging $1, a lot less people are downloading it than I expected, which is fine because I think people were just expecting it to be completely free. Because in the past, I did do it completely free, but I didn't simplify it and make it easy. But anyway, what was I going to say? Thanks, MG. That means a lot. Yeah, I think $1. $1 was a reasonable price. I think originally I was going to sell it for $2.50, which I still think is a reasonable price. There were some stores that I was going to try to market it on for a minimum. They were trying to charge a minimum of $5, and they I think got 30% of the profits. And I was like, well, minimum of $5. I was like, I don't want to charge people $5. So. But anyway, Retro Snack, hopefully you didn't sign off yet. Thank you. I know there's a 15-second delay, so thanks for stopping by. Asked some really good questions. And so I think I'm going to cut it off here because the viewership is kind of falling off, unless you guys have some more questions. But Logan, check out that video if you want now, because I'm about to end the video. I think I'm over 2 hours at this point. But what was it to say? If you haven't already, please subscribe. It means a lot. I already had 140 people come through, which also means a lot. But it has been 2 hours, so that's pretty crazy. But yeah, really appreciate you guys stopping by the channel. As always asking great questions. And if you like the live streams, let me know. If I'm trying to think if what I can where is the best place for you guys to leave questions so that I can kick off videos with questions rather than just like sitting here awkwardly? Because I think both times when I've kind of come up on a live stream, and this is something that's hey Ernesto, thanks man. Um, Thanks for stopping by. I always sit here for like awkwardly for like a minute or two until like two or three people kind of come in, and then I'm like, hey so and so, hey so and so, and then luckily people generally have been asking questions. So yeah, feel free to ask questions below. I'm gonna try to. There is a Facebook group as well. So if you guys want to ask questions on there as well, just look up Matt Money on Facebook and join that. There's not a lot of people in it at the moment, so it's generally been word of mouth here, word of mouth there, me trying to send it to people. So guys, thank you. I will talk to you guys soon. Thanks for looking at my funny face for 2 hours. Have a great night.